To start trading strike options on Crypto.com, you first need to have an account and complete the necessary verification process. Once your account is set up, navigate to the Crypto.com exchange and select the Derivatives section. Here, you will find the option to trade strike options. Strike options allow you to buy or sell a specific cryptocurrency at a predetermined price, known as the strike price, before a certain expiration date. There are two main types of strike options: call options and put options. A call option gives you the right to buy a cryptocurrency at the strike price, while a put option gives you the right to sell. To trade strike options, start by selecting the cryptocurrency you want to trade and the type of option you want to buy. Choose your strike price and expiration date, and then enter the amount you want to trade. It is essential to have a clear understanding of the fees associated with trading strike options, as well as the potential risks and rewards. A key concept to understand when trading strike options is the concept of intrinsic value and time value. The intrinsic value of an option is the difference between the strike price and the current market price, while the time value is the additional value of the option due to the time remaining until expiration. When trading strike options, it is crucial to have a solid understanding of market trends and volatility. It is also essential to set clear goals and risk management strategies to minimize potential losses. As with any form of trading, it is vital to stay informed and up to date with market news and trends. Best practices for trading strike options include starting with small amounts and gradually increasing your investment as you gain experience and confidence. It is also essential to diversify your portfolio and not put all your eggs in one basket. By following these steps and staying informed, you can successfully trade strike options on Crypto.com and potentially increase your cryptocurrency holdings.